Patrick Boyle, welcome to Hidden Forces.
Thank you very much. I'm very excited. I've been a long time listener, so very excited to be on the podcast.
Likewise, you and I have gotten to know each other. You were at our London dinner. You were one of the special guests at our London dinner, and then me, you, your wife, and my wife got to hang out over the weekend and went to dinner. It's been wonderful getting to know you. So I'm so excited to have you on the show.
Yeah, it's been a ton of fun. Yeah, thank you.
So you have your own YouTube show. In fact, when I first started listening to you, because I'm a podcast guy, I'm not really a YouTube guy, although everyone has forced me now. I have to put out videos, so we're kind of making an effort to do that, splicing videos up for promotional purposes, etc. I had no idea when I invited you to the dinner that you have not just a popular YouTube channel. I mean, I liked your podcast. I had no concept of how many people listen to it or anything like that. But on YouTube, you have videos in the millions of views. I don't know. You can tell us how many subscribers you have. So the show is called Patrick Boyle on Finance. I want to get into your career before we get into a larger conversation today. But just real quick, like, how successful is the show, and like, what has that journey been like for you?
Well, it's doing really well now. There's sort of always a funny thing with these things where it's doing well, and you always wonder, is this an anomaly? Will it retreat? At some point. But yeah, at the moment, it's kind of a funny thing where I started it up really just to help my students at the university, basically give them little, bites of information as revision work. And then during COVID, there was sort of this thing where, my students were all, attending classes on Zoom. And I felt that they didn't really get the kind of interaction you might normally. So I thought, well, I'll do my Zoom classes with the standard stuff with the students, but then I'll put up these extra bits that kind of would almost be like the little conversations we might have in class, like when a news event occurs and you kind of say, well, this is a little bit interesting from a financial perspective because, and, I started putting that kind of thing up, and the rest of the internet seemed a little bit interested. It was mostly students for probably over a year. And then kind of back when oil prices went negative, I put up a quick explainer as to kind of how that happened and why it made sense. And the world was a bit interested in that. And so then as time has gone by, I think my students probably hardly watch the channel at all anymore, and the outside world does. So.
Did you tell me the story? For some reason, I don't remember you telling me or knowing that you started the show as a way of teaching your students remotely during the pandemic.
Yeah, well, it's really, a lot of the time, like I'll get all emails from students, especially as the exams approach, and they'll say, can you explain this again? And, I'd sort of type out this long email. And I thought, well, gosh, it'd be easier if I just had it in a video format where I just sort of share a video link with them. So if they said explain dynamic hedging to me, I'll just say, well, here's a video link. And then I started embedding them in the PDFs of the slides so that the students could basically, while revising, if they're confused about something, click on a link and I pop up and explain it to them. So that was really the original purpose of what I was doing, to
So
save myself time, I guess.
it's such an interesting way to start a show. I love that. And you're a professor at King's College, right? Isn't that where
Yeah,
it
I
is?
teach at both King's and at Queen Mary in London. Yeah.
So tell us a little bit about your career. How did you first get interested and involved in finance?
It's a funny thing. I was generally interested in finance. My dad was a doctor. He used to read the FT, it was kind of lying around the house. And that sort of was the newspaper in our family. So I kind of glance at that a little bit. And what's interesting to me about finance is that it's sort of an explainer of how the world works, and kind of why decisions get made the way they do, because no one really wants to make a decision that loses them money. So almost all government decisions, all policy decisions, almost everything you think about um, is usually filtered through this idea of kind of who wins and who loses, and how can we make this work for everyone, or work such that outcome we want to happen happens. And the answer is that it has to sort of make sense from a financial perspective. And so I guess just being interested in how the world works, you become interested in finance. And I then, when I graduated university, I got my first job working at a bank as a trader. And that really was like order entry, where portfolio managers made a decision and I would kind of call around to buy stocks or bonds or whatever to put in our customers' portfolios. And I really enjoyed that. I enjoyed talking with the portfolio managers. I enjoyed learning about the companies and kind of what causes, something to grow or to shrink. And, just read a ton of books and that kind of thing on the topic. And that was really
What were you reading at that
what
time?
Oh, it was funny because that was sort of the late 1990s. And at the time, you'd go into Barnes and Noble and like half of the store was financial books just because we were in kind of a booming market at the time. And I would read all these books, like kind of, I read a lot of sort of history books about, kind of how people have made money in the past, because I thought that would be useful to know. And then I'd read like a sort of famous portfolio manager books. So I'd read, sort of Peter Lynch's books or, all of those kind of big investment books that are out. And at the time I was, wandered into a Barnes and Noble and I picked up a book with a sort of interesting cover on it that was called Education of a Speculator, which was by Vic Niederhoffer. And that book really, really interested me much more than the other ones did, because many of the other books were kind of about people with an instinct for what's good and what's bad. And Vic Niederhoffer, he wrote a book about his approach, which was a much more mathematical approach to markets. And at the time, I had been drifting a little bit in that direction anyhow, because I was working at a bank and, I was sort of a young looking, I don't know, 22-year-old, and all of the senior guys were kind of in their 50s and 60s, like these are the kind of people who manage money, or at least back then that was the case. And I figured they have all of this experience which I don't have, and how am I going to get this experience? And I thought, well, I have this brand new computer with a copy of Excel installed in it. What I can do is sort of download a ton of stock market data, which was free on the internet at the time. And I thought, instead of just having to wait years to know this stuff, I can know whether it makes sense to buy, stocks with a low PE ratio or a high PE ratio. I can know how long a recession lasts. I can know what predicts a recession, all this sort of thing. So I'd started building these spreadsheets
On
to
your own
just
time. This was just a personal project.
yeah, well, it was, I had moved from Ireland to the United States and I didn't really know that many people. And, I had this new computer and internet access. So, yeah, it was kind of evenings and weekends. I would just try and understand how the world worked. And it was also a good way of learning how to use the software and whatever else. And so I would build these big models to just try and answer my questions. And then when I read Victor's book, I was like, oh, this is a way of thinking, and this seems to work. Now obviously Victor's models were way, way, way more sophisticated than anything I came up with. But wildly enough, I kind of, messaged Victor, asked him a few questions, and we
How did you
got
get his
into
email?
he had and still does have a website called Daily Speculations, because the internet was new and Victor was the kind of guy who jumped on new and interesting things. And so I just I just messaged him, and I was really surprised that he messaged me back, and we got into this conversation, and I would send him my spreadsheets, and he'd tell me, that's an okay start, but you got this bit wrong and you're doing that wrong. And it's this oddest thing in the world, because he was so, I think it was probably the early ages of the internet, and he probably didn't get that many emails at the time, maybe, because I can't imagine how nowadays someone would have time for this. but he was very generous with his time and would just converse with me and kind of look at the things I sent and sort of say, this is right, this is wrong, you're a little bit off here. And I think in less than a year, I was working in his office, which was the oddest thing, like to go from buying a book and thinking this is brilliant to sort of sitting across a desk from the guy who wrote the book. But that's kind of what happened. So
Did he offer you a job or did you ask him for one?
he offered me a job. I never thought he would employ me because I didn't think I was, I kind of thought, I wasn't appropriate for this at all. And one day he just sent me a message and he said, "You're wasting your time at Bank of America. They're not going to do the kind of things that you're interested in doing. Come and work for me." And I slightly couldn't believe it. And amusingly, I just bought an apartment in Boston, and sort of planned on staying there. And I gave my notice at Bank of America. 2 weeks later, I was in Connecticut and my apartment was rented out. And, I was sort of en route to a hedge fund
Were
career,
you
which I hadn't expected at all.
were you single at this time? Was it just you making these considerations?
Yeah, it was just me. Once again, there's a lot to be said for being flexible when you're young, that you're able to sort of jump on opportunities like this. Because, if you're in your 40s with a wife and kids, you don't get to move on a whim like that. A
Mm,
few people thought I was nuts. A few people said to me, "You've got a good stable job there. Why would you go and
God.
uproot
Thank
yourself and
God you didn't
whatever else?"
listen.
But well, I was so excited. I had no interest, and I tell my students this as well, that when you're young, what someone offers to pay you is of limited interest as long as it kind of covers your costs. Like I
Mhm.
tell them never to accept the kind of person who'll ask you to work for free. You shouldn't work for. Like that's obvious to me. But beyond that, if you get two job offers, you shouldn't look at the pay. You should decide whether it's interesting or not, because you can afford early on in your career that the pay differential won't matter. The career development will matter. And to me, I knew I would learn so much working for a guy like this, that as long as I could put food on the table, it didn't matter. It did happen to pay more, but that didn't matter
Mm.
to me in the slightest. It was just the most exciting idea ever. So
I totally agree with that. I feel like one younger people today have a more difficult time making that trade-off in their heads. Money seems to be more important to them. And I think that might be because there's also an expectation that it's possible to make that kind of money easily at that age. That wasn't the case when we were younger. I'm curious, like, what your experience is. Does that resonate as a professor who speaks with a lot of younger people?
It does. I think there's a group of younger people who sort of expect to be like billionaires within the next 12 months. That there wasn't really in my youth. I think pre-internet, or at least pre-social media, our expectations were grounded in what we saw around us. They were grounded in our community. If your dad was doing well, you'd kind of say, well, hopefully I can do well like my dad has done. Or if a friend was doing well, you'd say, well, hopefully I can do that. While nowadays they go on the internet and there'll be some 20-year-old with a Lamborghini telling them that the huge wealth is just around the corner if you have the right mindset, which he'll sell you for $1,000 a month. And there's a group who really, I think throughout history there have been periods when this sort of real rags to riches story caught the public imagination, but I think it very much has now. And I've been probably, when did I start teaching? In 2009, I think. So I've been teaching for a while. And the students that have that mentality, I've never really seen them be my most successful students. The truth is the sort of steady and smart students are the ones who tend to do well. And at this point, I almost feel I can pick them out of the crew. They're the ones
Mm.
with the good questions in class, and they're the ones with that kind of live more in the real world, because that's where we're competing, is in the real world. And if your expectations are out of whack. Like, it's no harm to dream big, but the problem is that if you expect magical events to transform your life, you're likely to be disappointed.
It
So
also depends on what your dreams are about, or more to the point, how closely your dreams are aligned with what you really want to do with your life. And could you see yourself being alive and living your life without doing that thing? If that thing is so important to you and so meaningful,
mm.
then it's worth chasing that dream because you'll be
Oh,
unhappy without it, you know?
it totally is, but the problem is, if the dream is money rather than an activity that generates money, you don't really, you've sort of, you see a goal, but you don't, you've eliminated the pathway towards it. And I think that sometimes how people make money is by adding value, right? Like, if you do something that adds value to a lot of people, they'll pay you for that, in a variety of ways, or you'll have a job that's highly paid because you're adding a lot of value. And the problem with sometimes the get rich quick mindset is that it doesn't involve really adding value. Like, if you even think of, like, when you think of employing someone, you think there's sort of a multiple of their income that they have to make in order for it to be valuable for you. Because if you hired someone, let's say it's a break-even trade where you pay them $100,000 a year and they make you $100,000, you also have the emotional cost of sort of dealing with them. You have the cost of filling out various amounts of paperwork. You have, the stress of them coming. You have to rent office space for them. All of this sort of stuff. That's a losing deal. And so for an employer, an employee has to make them a certain multiple of what they're going to be paid in order for it to be value added. And so for someone who sort of thinks that straight out of university they'll earn $1 million a year, they have to have a way of making the person who's paying them that a multiple of that amount. And even, if we think about it, like anything that we do, like, your podcast has to add basically more value than you're getting paid in order for someone to feel it's a good value added to subscribe,
Yeah.
so.
Yeah. I always tell people that the most important thing you want to do when you're young is to be useful to someone else, right? To your employer, and
Yeah.
hopefully to someone like Vic, who clearly took an interest in you, who was a sort of a mentor. And we've talked about him before, and we're going to talk about him again now. But I've always, I haven't told you this, but it's always been obvious to me in the way that you speak about him that you really, you love him. You have a real affection for him. There's I want to mention a quote by Tim O'Reilly, who had been a guest in the early days of the show, related to this thing about money. He has this great quote about money being like gasoline during a road trip. You don't want to run out of
Mm.
it, but you're not doing you're not doing a tour of gas stations either. So like
Yeah.
money really is a tool, and I think that's the best way to think about it. So when did you start working for Victor officially, and what was the fund that he had at this time? Because he had a fund, I think in '97, that went belly up with
Yeah.
the Thai baht. So like some trades he had on the Thai baht, or some of the turbulence that happened, the volatility that happened around the Asian financial crisis and the fall in the Russian bond market.
So I started working there in 2001, right around the time of September 11th, so a rather dramatic time to turn up at a hedge fund, because, the world got very interesting very quickly. And yeah, I think I was there till 2005 when I left to do a master's degree in London. So, yeah.
And you worked with a mutual acquaintance of ours, Adam Robinson. Was Adam at the firm when you got there, or did he show up
I
later?
was there before Adam. I think he might have arrived about a year after me or something like that. And yeah, Adam is sort of, I kind of joke. I think Adam's almost the most interesting person alive, because he's found himself in so many situations. Not to spoil it on your upcoming interview with Adam, but I worked with Adam for, I don't know, 2, 3 years, and sat next to him, like, and talked with him all day. Like, Adam and I were kind of really work buddies. And it was years later that I learned that Adam, like, I knew he was good at chess, and I knew he was ranked as, I think he's a chess master or something like that. But he never brought up that he had been the training partner of Fischer in the lead up to sort of the biggest chess game in history, and it tells you.
Didn't he get shacked up in like some cabin in the woods and he just sat playing with Bobby Fischer for like days
They
straight?
spent 6 months playing and strategizing, and it's such a good story. Like, I'm not going to badly tell the story to you because you're going to have Adam on shortly, but it's such a good story. But how interesting is Adam that he has a story like that? You know him for 3 years. You're telling each other all of your stories, and that one doesn't come up because he's got so many more interesting stories. Like,
Yeah.
it's ridiculous.
Yeah, I think he has an underappreciation. He's someone that vastly underappreciates where he is relative to everyone else because some sort of internal diagram is what he's using to judge his success in life and sort of the quality of his work that is just totally out of bounds with where most people are.
Well, he's relentlessly curious, which is kind of amazing, because he's always like, he's never interested. Like, actually, I think that's why he's had such an interesting life, is that he's always looking for new, exciting, like, new mental stimulus, and never dwelling on the past, on what's happened. And so the past will get him. I guess the fact that he has an interesting past helps him have an interesting future. But he's always looking for kind of new and interesting things. He's always marching forward, and that really has worked for him.
So just to wrap this part of the interview up, you worked for Victor for what, 3 years, you said?
Yeah, probably 3.5 years, or that sort of period. Yeah.
And then you went to work in academia. Was that sort of the transition?
No. I went to do a master's degree in finance at London Business School, and the real reason I went to the UK was just that my sister was studying in Cambridge, and I kind of thought, if I'm going to take a year off, I might as well go somewhere different, and it would be fun to live near my sister. And so that's what I did. I went to London, and then in London I met my wife, and she was working in London, and so I had definitely planned on returning to the United States, and instead I ended up staying on in London.
Hmm.
So.
All right. So I put together, this is an unusual conversation because we know each other, and I didn't sort of script out a whole thing like I normally do. Instead, I create a bunch of topics that I sent you. I don't know if you had a chance to see them before
I
the
did,
interview.
yeah.
They're kind of all over the map. But let's start first with the recent meltdown in financial markets. So we're recording this on Thursday, August 8th. Last Friday, August 2nd, and then what would it have been? Monday, August 5th or 4th. We had two significant down days in financial markets, and Monday was Asia, and the Nikkei dropped something like 13%. There seems to be a couple of sort of explanations that are floating around for what happened. One is that this was driven certainly in part by the reversal of the yen carry trade. Another is that it was just a culmination of a lot of drip, drip, drip negative economic data around employment and concerns that maybe the possibility of a hard landing was actually not being adequately priced in, and that also was exacerbated by options positioning. I'm just curious sort of to hear your take on what you think occurred, and also to the point, what can we infer about that for where the market is going to be trading at and what risk is going to look like, risk sentiment is going to look like going forward.
Well, it's a very interesting thing. There's a few things that really came together, and that's often that's sort of how markets work. Like, everyone wants to sort of point at a thing and say that thing happened and it caused everything else. But there's a good argument that the spark was the bad unemployment number that came out. But a spark doesn't do anything if there's not a lot of fuel lying around, and there was plenty of fuel lying around. And you know, the other thing that happened almost at the exact same point in time was the Japanese interest rate hike. And Japan is sort of a topic I've been interested in for, gosh, I've been probably making videos for about 2 years on the topic of Japan, because I would argue that, you know, at the moment, some of the most interesting things in markets are, you know, the slowdown in China and what's going on in Japan. And Japan is in many ways can be seen as sort of the extreme version of what happens when markets are maybe overly interfered in a rather long run period. And you know, Japan is sort of actually one of the things that amused me was that a lot of the news headlines said that the fall in the Nikkei was the most extreme fall since the 1987 crash. And why that entertains me is that in 1987, the only market that didn't actually crash was Japan. And the reason it didn't crash wasn't that, you know, everything was fine, because the entire world crashed in 1987,
Right.
other than
What was it? The
Japan.
Dow or the S&P dropped by 20% in the US?
Yeah, but basically every market, Germany, the UK, you know, you name it, everywhere fell other than Japan. And the reason it didn't fall in Japan is, of course, that the Japanese Ministry of Finance and the Bank of Japan had extreme control over the market and just kept it in place. And it's very interesting because the whole world collapsed, and within, you know, the next day there was a recovery, and within 2 years the sort of effects of Japan of the crash had disappeared globally. But Japan avoided the crash, and then over the next 35 years, you know, all of the manipulation and all of the juicing of the economy came back to bite them. And that's kind of a fascinating thing. The other thing I would add that's fascinating, the reason I even got so interested in the situation in Japan was I made a video about the 1987 crash. And in researching it, I came across a letter that George Soros has up on his website where he wrote about the 1987 crash. And he wrote this in 1988. And at the time, he resolved that what had happened in 1987 was that on that day, the world finally recognized that there was a transfer of power, of economic might, from Western countries to Japan, because Japan, you know, at the time was what China is today. It was this rising power, and you know, all the manufacturing was moving there, all of the technology, you know, Sony and whatever, all these consumer electronics were coming from Japan. And Soros felt that what had happened was the world had decided, you know what, it's done in the West. The future is Japan. And of course, that turned out to be entirely wrong. And I don't tell this story to say Soros was wrong, because he's, of course, everyone is wrong most or half of the time, but Soros is right more than he's wrong, and thus has made, you know, massive wealth out of that. But what had really happened was that Japan had spent a very long time sort of manipulating their economy up, generating sort of GDP without really generating wealth. And where do we go from there? And so now Japan has been dealing really for 35 years with these problems. And there's an argument that, you know, maybe there's some light at the end of the tunnel for Japan. But once again, there's all of these problems of, you know, they're trying to get some inflation. The idea is that if they can spur inflation in Japan, in particular, sort of wage inflation and services inflation, it'll sort of kickstart the economy and start them growing again. And so Japan, one of the reasons that Japan is so interesting is that every other country in the world is suffering from inflation and has been trying to quell it, while Japan has been suffering from deflation and trying to spark inflation. So they're entirely out of sync with the rest of the world. And this has brought about all sorts of issues. Firstly, just that they're doing the opposite to the rest of the world. It kind of means that the carry trade got huge, like because everywhere else in the world, interest rates are going up. In Japan, they're keeping them low. And that has basically meant that you could borrow money in Japan, invest it elsewhere in the world, either in bonds or in stocks or whatever you want it to be. And, you get these low interest loans. There's even a thing called samurai bonds, where a lot of African countries have been essentially, because it's expensive for an African country to borrow, they worked out that they can borrow in Japan and get a slightly lower interest rate. Of course, the problem with that is that they're exposed to the foreign exchange risk, which now will be biting them. But the whole world well, not the whole world, but a big part of the investor base started looking at this interest rate differential and seeing ways of profiting from it. But it's a little bit of a pennies in front of a steamroller type trade. And then as that started to unwind, the interest rate hike in Japan made the return on that lower. The bad employment number or unemployment number in the United States meant that rates might go up. On top of that, there was a realization in the United States with this bad number that maybe they should start pricing in the idea that there won't be a soft landing, which, a couple of months ago was almost, the market just felt was guaranteed. And I even, I made a bit of a video on the Trump trade and the idea, straight after the Biden-Trump debate, when it looked like a lock-in win for Trump unless they replace Biden, that the market wasn't really reacting to much. There was all of this sort of stuff happening, and the market was just sort of cruising along. Sort of that meme of what is it, sort of a dog sitting in a house that's on fire saying everything is just fine. And so the world suddenly started to price in probably geopolitical risk, the risk of a harder landing, and the carry trade started to unwind, and all of that turned into a ghastly mess, kind of Friday and Monday.
So, we'll continue. I have more questions about this, but since you brought up Japan and the deflation there, I wonder how useful the Japanese example is for thinking about where Britain, the United States, and other European countries will find themselves, because Japan, from a demographics and debt perspective, has always been ahead of the curve. And there are sort of two schools of thought on this. Some are that, yes, this is the path that we're going in, and therefore long-term concerns about inflation are really unwarranted. And then you have the other school of thought, people like Charles Goodhart, for example, who's been on the podcast, which is that actually the same factors that have driven deflation in Japan in this new world, in part because everyone's going to be dealing with these problems, is going to become inflationary, driven by government deficit spending and other policies that things like credit easing credit rationing that people like Russell Napier have also talked about on this podcast. So I'm curious what you think of that.
Well, I lean a lot, in the Charles Goodhart direction. I should clarify the reason for that is that Goodhart's co-author, Manoj Pradhan, happens to be one of my best friends. So I kind of talk to him about this stuff all of the time. And I think he makes a very good argument about, how demographics drive inflation and deflation more than anything else. Japan is such an interesting situation because they have it slightly looks a little bit like an unsolvable problem. I'm not really sure that you can draw too many lessons for the rest of the world. But one lesson maybe that can be taken from Japan is the mistake that we often make in Western economies when we look at sort of a huge success that's very much engineered by policymakers and central bankers and so on. And we kind of go, oh, we're just letting it, we're allowing everything to be random in the Western world, in the United States. We just let people, start up businesses, and the best one wins, the worst one loses. And, we let it run free. While in Japan, they decided on the winners and losers. The country came up with a plan and sort of said, we're going to dominate in automobiles, we're going to dominate in this, that, and the other, and they made it happen. And back in the late 80s, early 90s even, there was still that thing where sort of successful people had their children studying Japanese and things like that, because it was definitely sure that that was going to be the dominant country in the coming decades. And similarly, we have the situation in recent years with China, where once again we look at it and we kind of go, oh, but look, they decided to dominate solar panels, and they've decided to dominate EVs, and we need a grand industrial plan just like they have. The government needs to decide to subsidize industries. They need to pick winners. They need to boost stuff so that we can compete. And I don't really agree with that point of view. I think that, the nature of free markets tends to be awfully messy. And I kind of lean a lot also in the direction of Michael Pettis, who I think you've had on here before. He makes some, he's probably, I think, one of the most knowledgeable people about international trade, I would argue. I listen to him a lot. But I think that the lesson is not to mimic. It's sort of like an athlete who looks at someone who's all pumped up on steroids, and they kind of go, well, this is what I should do. And then a week later, that fella pumped up on steroids keels over with a heart attack because he's overdone it. And, I think a big driver behind things like the Inflation Reduction Act was, excuse me, was just to mimic this approach of subsidizing the hell out of certain winners in certain sectors. And it's the worst thing, because when this stuff is driven by politicians, you look around the world, they've all picked the exact same sectors to subsidize. They all want, it'd be one thing even if you sort of said our country is good at, and you picked a niche, but instead they all pick the exact same things, which are sort of, green energy, hardware, and electric vehicles, and technology of some sort.
So I'm actually glad you brought this up, because I want to push back a little bit and explore the argument that the government has a role to play in seeding major technological breakthroughs. So, and in part, the argument I'm relying on is that of people like Bill Janeway, who also had been on the podcast years ago, who wrote a book called Doing Capitalism and the Innovation Economy. And the argument is essentially that the the marketplace is really good at commercializing technologies and finding profitable use cases for them. But that when it comes to certain types of innovations, the amount of capital required to actually seed them is so high that the path of least resistance for the market is to continue to double down on the technologies that have worked and to continue to commercialize them. And so this is kind of falls within also the category of answering Peter Thiel's question of where's my flying car. We've gotten really good at creating all these new apps and apps and apps for social media and for our phones, but we haven't really seen the kinds of breakthroughs like we saw with the invention of the suite of internet protocols. And I think an analogy that I would, or the counter argument, it's not counter argument, but I would compare like how we approached the creation of the internet protocols, which were subsequently commercialized in the form of the World Wide Web, differs greatly from what we have seen with crypto, where I think the profit motive, and especially the ease of resale of actually the secondary market for cryptocurrencies, has created this kind of almost like gaseous environment where nothing really solidifies because the profit motive just takes over, and the incentives aren't really properly aligned. I'm curious if you think that there's any role at all for the government, let's say, in promoting incubators in academia that work with various parts, like we had it during the Cold War with the Defense Department. I mean, is there any case at all for any kind of thing, or are you just opposed to expressions of it like the Inflation Reduction Act?
Well, I don't like choosing sectors to win because I think you can't. Like, no one in 1985 would have chosen the internet as a sector to win because it's like a bizarre thing that was small and no one was looking at. Now, money was spent on research. I do agree with funding universities. I think it's really important, and it's not because I work at a university, just to be clear, but I do think it's really important for people to have access to education, and in particular, like the best brains, you want them to be able to go to university to work with the best and to learn and to develop things. But in terms of sort of picking what will be the big winner in the coming years, I don't think anyone is necessarily that good at that. And amusingly, the counter argument to, will the private sector fund moonshots actually is the crypto world, right? Because, people will sort of say to you like, oh, there's been no IPOs anymore. Everything's gone private because people won't put money into a startup. But then every time I hear about these crypto scams, like there's such huge amounts of money, you know what I mean?
Hmm.
Like it's shocking, like the hundreds of millions and billions that go into like really like stupid projects. And that actually shows you that there is an ability to raise capital. Now, granted, it unfortunately got deployed into maybe, not an awfully useful, like kind of a gambling space. But that also is the nature of markets. Like when you look at, the early railroad, for example, like a huge amount of, like a shocking amount of British GDP was dumped into railroads. That was all just total malinvestment and misspent. But then, it's sort of a bit like the laying of fiber optics in the first dot-com bubble.
Hmm.
That's infrastructure then gets used. Um, I'm not a big fan of crypto. I think it's interesting. Like, I think there's all these interesting economic experiments in there, but I don't think anyone should really deploy significant capital there because I think mostly it's Ponzi schemes. But the very fact that sort of such thinly thought out and almost photocopies of prior projects can raise massive amounts of money actually tells you that the private sector will deploy capital into an area where they think they'll earn a return. Um, and then the question, the problem with saying like, why was there innovation at, we can pick sort of 5 points in history and see innovation and then say, and now we've just spent the last 20, 30 years optimizing it. That's sort of the way scientific breakthroughs
Mm.
work anyhow. There's not a constant stream of amazing new things. There's kind of the Industrial Revolution, which is kind of the steam engine and a few other kind of, we'll call it like robotics type innovations that occurred that allowed, sort of transportation and manufacturing to really take
Hmm.
off. There's things like the internet. There's things like, there's a list of like big innovations that have happened, but they tend to be random and difficult to predict. And they're often driven by the curiosity of sort of hobbyists that get well funded. Amusingly, I was just over the weekend, I was talking to a friend of mine who went to a big experimental aircraft show. He builds little airplanes, and he went to this show, and he was telling me about a guy there who had built like a scaled down, like I don't know, a one-third sized fighter jet that does all of the stuff that a fighter jet does. It'll break the speed of sound and all sorts of things. It's a remote control airplane that a guy built in his garage. And the thing is that actually people are shockingly innovative and they're shockingly capable. And it's often sort of a guy tinkering in a garage. And in a funny way, when a government sort of says we're going to pick a thing that we'll be good at, and we'll pick a guy who'll be good at it and all of this stuff, there's so many places to fall down, like where you pick the wrong thing, you pick the wrong guy, all of these things. While in a funny way, the natural and messy way that a free economy works, it's sort of like water working its way through sand or whatever it might be. It seems to work even if it's awfully messy, and if there's huge losses along the way and mistakes are made and whatever. They're mistakes that are made with people's own money rather than sort of taking money from the public and making a mistake. It's a very different thing to make a mistake with your own money than for the government to tax you and use that to make a mistake. So
Yeah, no, I mean, I agree with that. And I have always, for most of my life, I've fallen in that camp of thinking. But the episodes and the books that I read in the course of doing these shows over the years, like I gave the example of my conversation with Bill Janeway, as well as a conversation I had with Safi Bakal, who wrote a book called Loon Shots, which is a reference to moonshots. And I remember one of the stories in that book was Vannevar Bush's creation of the Office of Scientific Research and Development, which was a response to the need to innovate during the course of World War II. Now it's so hard, and to your point, like it's very hard to go. So I guess a couple of points to clarify. One, I totally agree. You can't explicitly try and find the genius, right? Like tinkerers, like perfect example, Claude Shannon, who developed information theory while he was working at Bell Labs on the side as a side project, which is kind
yeah,
of what Google has tried to do with that initiative that they instituted years ago, which was to like give Googlers some percentage of the time that they're at work to be able to work on their own projects.
yeah,
But what I think was really successful, what made this kind of approach successful during World War II and the Cold War was, I think, two things, one of which is possibly replicatable and the other maybe not. The one that is simply creating space for people to play, creating
yeah,
opportunities to work in a setting where the thing doesn't need to be profitable, but there's a certain amount of research, and you can just kind of put creative people who maybe aren't really interested in being at startups to work. Now, also at this time, the startup thing wasn't a thing, like startups didn't really become a
yeah,
thing until the 50s, with William Shockley's Traitorous Eight. And that's when you started to see people actually, like make money and buy Corvettes from companies that they started. Before that, it was just company men. So there's also a challenge there because we have a different economy today. So anyway, there's that. But then there's also the fact that there was a real sense of like common purpose. It was World War II, and then it was the aftermath of
yeah.
World War II. And that's much more difficult to engineer. So I think a reasonable counter argument to make that I could find convincing when I make my argument is that it's just very difficult to do that today, just given where we are. It might be where we end up.
Yeah. No, well, I think it's interesting because, I'm always a little bit, I'm not one of these really, really hardcore market fundamentalists. I tend to lean more that way just because I think there's an efficiency to people providing their own capital. But I do think there's plenty of space for, to a certain extent, it's why most countries try and promote small businesses, because small businesses can grow into big businesses. And I think there's a lot to be said for sort of getting out of the way of entrepreneurs, or even just scientists with ideas, and as you say, providing a space for them, whether that's at a university or some sort of innovation lab or whatever. But not necessarily, that's very different to sort of picking a technology. The solar panel is a great example because it was invented in the United States. The manufacturing of it just entirely moved to Asia. And then they kind of go, we have to bring this back. And it's like, no, it's kind of gone at this point. And also you're now just talking about, you're not really innovating anymore. You're talking about just building a factory where these things are stamped out, it's maybe not as exciting an idea. There might be an idea around like stopping this stuff going abroad, but I don't know that you can bring it back. But another thing that's often really interesting when you look at a history of innovation, and the Manhattan Project is probably sort of the fastest scientific leap forward that's maybe ever occurred. And it was done out of a panic, out of a real fear, that sort of, that the Germans were ahead and that sort of Nazism could win out. But often when you look at a lot of the really great innovations, it often involves people from very different disciplines getting together. Like a good example would be the discovery of DNA, where the sort of three partners came from very different scientific areas, also meeting up with Rosalind Franklin, and all of these ideas sort of got jammed together. And Rosalind Franklin did an awful lot of this work, but she was doing it on her own, and she was kind of, and it's totally understandable being secretive about her work. And then, basically, I'm terrible with names. Watson, basically, at the age of 23, knowing very little about the area, managed to pull in a bunch of experts from other areas, plus his own expertise, plus his sort of hunger to advance himself, and rather quickly jam together a working model. And you see this in many areas, like where there's real innovation. It's often where, because people are making discoveries, like very linear discoveries in their own discipline, and it's when you can sort of smash those disciplines together where they say, oh, my thing might help out your thing, and suddenly we get an innovation.
Yeah, I think actually you've given me some ideas for what we're going to talk about in the second hour. Let me kind of put them out there, and then we'll transition to that part of the conversation, Patrick. So I feel like what has driven my interest in this area is that I feel like modern American capitalism doesn't work. Like I feel like what we have produced here is not working, both in terms of the way in which returns are allocated by the marketplace, that has led to increasing levels of wealth and income inequality, creating instability politically in the U.S. I can't speak for the UK. I also think that what we saw with respect to the pandemic and supply chains, and now in the increasing geopolitical tensions between the U.S. and not just China. I mean, this is a worldwide phenomenon. The global order that was a backstop for the growth in free trade is breaking down. And so how do we build a more resilient economy that addresses those both economic challenges of distribution as well as security issues? And I don't have the answer for that. And I'm, of course, a fan of capitalism, and for all the reasons that we know of. I feel like,
Mm.
that argument has been made, and I'm all on board for it. But I feel like we're at a place where the way in which the model works doesn't work. And I'll give you a perfect example of this that I feel like, I mean, a simple, stupid little example is Marvel movies, right? But that's just,
Yeah.
no, who cares? That's not impactful. But it's just an area where you can see some of these dynamics at work. But I feel like social media is a great example, because I feel like social media is the classic place where you have this huge economic externality, which is, name it, depression in children, um, social dysfunction, anger, uh, again, misinformation, but there's misinformation in both directions. It's
Mm.
government misinformation. It's also the public being misinformed because of uh, all sorts of sources of misinformation. Pardon me. And I feel like because and our approach is to allow social media companies to simply set the terms. And with all these new technologies coming to the marketplace, AI especially, we're going to the world of the matrix, into a kind of feudal technocracy, and it's run by private companies. And our current framework for regulation in America basically says, like, it's hands off, and we don't trust the government, because in America, people think of the government as the three-letter agencies and the executive branch and the use of executive orders, and not Congress
Mm.
and hearings and legislation and regulations. And I feel like this is an area, again, where we need to have some kind of government oversight, not to pick winners and losers, but very high level. And I'm not saying this is the right answer, but I always use these examples. You could just simply say, we're going to prohibit ad targeting or ad buying for social media. I'm not saying that that's the solution, but I'm just saying that a high level thing, and it can backfire. It can have all sorts of unintended consequences. But I just feel like as things are going now, what we're doing is the things that matter most to us are most to us, like the mental health of our children, the functioning of our society, fall into the category of economic externalities within the model that we use to run within the model that we use for our modern society. So that's just one area. I mean, I mentioned the examples of manufacturing and the pandemic. So those are some of the topics that I want to talk to you about in the second hour, Patrick, as well as the geopolitical issues that you touched on early on. We were discussing possible reasons for the market decline. For anyone who is new to the program, Hidden Forces is listener supported. We don't accept advertisers or commercial sponsors. The entire show is funded from top to bottom by listeners like you. If you want access to the second hour of today's conversation with Patrick, head over to hiddenforces.io/subscribe and sign up to one of our 3 content tiers. All subscribers gain access to our premium feed, which you can use to listen to the rest of today's conversation on your mobile device using your favorite podcast app, just like you're listening to this episode right now. Patrick, stick around. We're going to move the rest of our conversation onto the premium feed.